Good morning everyone. I'd like to welcome you to the first video in a series of videos I'm going to be doing, releasing every Sunday. We can call it the weekly market review, and it just gives me an opportunity to go over a few charts, let you know a few pairs that the mentorship group are looking at for potential trades over the next couple of weeks, and just to sort of freshen your mind up, get it right for the trading week ahead, and hopefully this video will either give you a little introduction as to what goes on in the mentorship, or at least it will help you in your trading for the week ahead, and hopefully catch some of those pips and profit from the moves that look set to be happening over the next couple of months. So I've got 1, 2, 3, 4, 5, 6, 8 pairs here that we're going to quickly go over, mainly on the higher time frames, just to give you that sense and that bias of where these pairs are heading over the next few weeks to a few months. So Euro USD here, we're going to start on the weekly time frame, and we can see what a key level 1.1300 has been for this pair. Ever since the 14th of November 2016, where we saw the price reject from this level, we had one breakout, and ever since that breakout on July 2017, we saw what we've seen: one rejection, 2, 3, 4, 5, 6, 7, 8 rejections off this level, off a weekly time frame. Last week, the price did run down into this level off the back of the ECB meeting, and the price rebounded, and for me it looks like we are going to go higher, just for the time being at least. So what we like to do is we'll like to plot our fib on from the most recent swing points, point A into point B, and now we can look for the price to return up to this level here around the 1.1650 level. Now it's important that we keep these as zones. The markets never really react to one individual price point. We always like to look for zones for the price can come into before looking to rebound. We can also see on the daily time frame, on Friday closed as a bullish engulfing candlestick, which also closed back above the moving averages. We are actually just waiting for this moving averages to cross back over before we can start looking for buying opportunities up to 1.16500. Now another pair that we look at is Euro JPY. It gives us a good example of why you need to be patient when trading the markets. As you can see, we are theoretically stuck in a zone, a 100 pip zone between 124 and 125. For us, I'm not really a range trader. I mean, you can get a lot of success just intraday trading this pair. As you can see, if you were selling from 125 with targets at 124 and vice versa, you would have seen some great success with this pair over the last week or couple of weeks or so. But for me, I like to wait for those confirmed breakouts before looking to enter the continuation trades on the pullbacks. And as it is, we just haven't had that confirmed breakout. We're looking for a breakout in the daily time frame. Yes, last Friday, 70 Euro USD, Friday showing a very aggressive bounce back off 124, which seems to be holding some momentum. So this week I am looking for that breakout to the upside, but we won't be reacting on this pair until we do see that daily candle close, whether it be above 125 or whether it be below 124. Obviously, a daily candle break back above 124 will allow us to then look to enter on a pullback before targeting 12600. Something like that. Alternatively, if we were to break 124, we will be looking for exactly the same move. The breakout, the retest before looking to sell to catch the continuation. So quite simple there on Euro JPY. I think one of the most important things is recognizing what condition the market is in. And I only like trading in trending markets, so I'm gonna be waiting for those breakouts. The markets, when they're ranging, they still do offer those intraday opportunities of around 50 to 60 odd pips. Now New Zealand US dollar looks like to be playing out very, very nicely. This is what we like to call the perfect trade setup within the Trade on FX mentorship community. We've had the four or five things that we like to look out for. Number one being a rejection out of the fib reversal zone. Number 2 being a moving average crossover and the moving average breaker. And number 3, seeing the price break above a counter trend line. Now all 4 of those things have now happened, and I do expect the price now to start making its way up to the D1 extension level, which lines up very nicely with our key monthly level at 0.7100. Any pullbacks on this pair back down to around 0.6800 will definitely allow us to start looking for buys, with stops being quite tight just below the previous low, probably about a 50 pip stop for a nice 300 pip gain. So this could be a very nice trade that we look to enter this week if we were to get that pullback, to try and retest the moving averages, retest that counter trend line before we look to go higher. But that is looking very promising and something to keep our mind on. Now, gold has been a pair that we did actually get caught out on last week. We were expecting the price to roll over to the downside after we thought that we did get a break back out of the moving averages, or at least some stalling around this level. It wasn't to be the case, and obviously Friday's candle completely blew everyone out to the water. But what finally did happen was that 1.300 was achieved. Now, this was a level we've been speaking about for a while in the group. Ever since we did rebound off 1.200, the third bounce of this counter trend line, we have been expecting, well, firstly it was 1250, then as soon as that was broken, 1300 was the upside target. And it's nice to see that that has been met. Unfortunately, we didn't actually catch that last final push, but believe me, we were all buying in the mentorship, we were all buying this rally to the upside before Christmas, and it's paid us quite nicely. Now, obviously, the next move for gold looks quite simple here, and it's simply just waiting for a pullback at the moment to the 1300 level, which we have got now. But realistically, we like to trade a bit deeper pullback, so we're like a pullback to 1950 at least before we can look to potentially go long again. And the next target has to be 1300. If you remember, I've been speaking for a while that gold is going to hit some high prices this year, and that was all basically comes off the fact that we've had this longer term fib drawn in, bullish fib from the 2 swing points here, and we can clearly see we've had a very nice rejection out of that fib reversal zone. So for me, this year, this price is going to continue to rally, with 1350 being the next upside target, providing that's taken out, 1400 and on its way to the D1 extension at around 1430. So again, buying or pullbacks should be the theme for this week and for gold, as it's sure to offer some great opportunities going forward. US dollar CAD as well, quite similar. It's quite an obvious setup here for me. I think 1.3100 is a great downside target to be aiming for, and it looks like the price has made that initial break to the downside before we look for that pullback to then look to enter the market short at around 1.3300 and then target 200 pips to the downside. Within the mentorship group, we have actually been buying this pair over the last week or so. We entered some nice long positions here, and then again here on the pullback and retest of the counter trend line. We were targeting 1.34. We came sort of 25 pips short of that before we saw the price try and fail to break back above 1.3360. One drive, two drive, and then we saw the breakout below the moving averages with the crossover, which then led to that 150 pip dump in price yesterday. But as I said, quite an easy setup appearing here. We're looking for that pullback into an area where we can sell from before targeting 1.3100. USD JPY again, quite a similar outlook. Just waiting for that breakout really. Looking for that breakout to the downside. Last week showed us that we had 1, 2, 3 drives into this key level. Something again that we've been calling for this move, just to meander its way back up into a key level before we find that break or bounce scenario. In this case, it looks very much like we've bounced from 110.00. Now we're just waiting for that final confirmation before looking to short. We've had the moving average crossed over. We've had the moving average being broken back below. Just this intraday support level at 109.15 is holding the bulls in place at the moment. But if we did get that daily candle close back below 109.15, then we can look again for the retest before the continuation down to 108, and then maybe even lower. With yen pairs, what you do have to bear in mind is that we are still overall bearish. After the flash crash, which caused a crazy amount of move to the downside, the price has only really simply just been pulling back into a potential area where we can look to short from to continue that downward move. Now, on most of the JPY pairs, I have been saying that I've been wanting a bit of a deeper pullback, at least into the moving averages. But when you're trying to plot these pullbacks and plot these pullback terminations, you always need to be very flexible with it, because as you know, we like to trade with the overall trend, and if the overall trend is bearish, that means that the price can start falling at any point. We may not pull back into our preferred zone, so we need to be reactive to the markets rather than proactive, and then just simply wait for those intraday levels to break or key levels to break, wait for that retest before looking to trade the continuation. Now, the last pair on my watch list this week is Pound Aussie. The Pound Aussie obviously has had some crazy movements over the last 3-4 weeks, and it's nice to see that these key technical levels really do, they really are solid, and the price does really like to be drawn to them before reacting. And what we can see here on the daily time frame is that the price has ran straight into the 1.8500 level on Friday before pulling back quite aggressively, forming a spinning top, with the price now looking to pull back at least into these moving averages. Now, the moving averages are quite far together, which this does tell us there's quite a lot of bullish momentum left in this pair at the moment. However, as you know, the price can't just move directly to targets. It likes to form these swings. And right now, it's potential that we are going to unfold into a little move like this, similar to what we saw before when we got the reaction of 1.8250. We then sort of saw 500, 360 to 500 odd pip pullback from this level. Let's do that again. So 500 pip pullback from that level, and that is a move that we are looking to fulfill here. Potential move up there. 550 odd pips would actually take us down to 1.800, which would be a great move. We can now go down to a lower time frame again, and yes, it does build us with confidence that it might be a bearish week for this pair. However, we still need that confirmation. We still need the sign to tell us that, okay, the bulls are probably back in control in this market. So the bears are probably back in control of this market, and we should look to start to enter positions. And for us, we look like that. This 4-hour candle here does look quite promising. I've drawn on this intraday support level, which lines up nicely with the 4-hour moving averages. Now, what I'm looking for is this 4-hour candle to break. We like to see the moving average crossover before looking to sell on a pullback to the 1.83300 level, targeting initially 1.82500. However, if we do start seeing some bearish momentum, then I can easily see us falling another 250 pips into 1.800 level. Now, this move could happen quite fast, quite aggressively. I do believe that Theresa May is going to submit her second withdrawal agreement on Tuesday, which could give us that momentum, that volatility we need to spike down lower. But I think the best thing to do with this is just simply take it level to level. If we did get that 4-hour candle close in 26 minutes, then yes, any sort of pullbacks could be taken as a signal to go short. Just be careful though, because it is still a bit early on in the week. We're only at 9:30. Usually I like to wait till at least 2 p.m. on a Monday before entering any trades. So this setup may come just a bit too early, where instead I'll be waiting for that break or bounce around the 1.82500 level. So that's just a few pairs on my watch list. Hope that's helped you guys to pick a bias for this week, and maybe use these ideas to construct your own trading opportunities from. Again, I'd just like to remind you that this is not gospel. What I'm saying is not 100% going to happen. This is just my opinion on the markets, and I recommend that you use this in alignment with your own analysis to hopefully catch some pips this week.